I just want to do a quick video about using the Quantabotics SBI triggers to help with trading in a bearish market. I'm going to focus on sort of December to the present day. So this is a Bitcoin GBP. Let's just go to Bitcoin USD, which is a similar picture. So pretty much since the beginning of December, we've had a sideways to bearish market, and the difficulty is how to make profit in that on a rising market, like in sort of September to October. Here, this bit is fairly easy to see. So but here it's not so easy how you might configure a bot to deal with that. And I just want to go over an idea that I had, which is looking at the historic capabilities of Quantabotics. So I'm going to just nip into my bot here, and I'm going to have a look at the last 30 days, and I'm going to look at SBI Triggers. And here you can see we've got this new search system, and I'm going to put the take profit in at 1.4%. Okay, right then. So at 1.4% take profit, looking at historical SBI triggers, which are in this column here, the type column in the center here is the SBI triggers. These are all the dates on the date column. They are the time column, date UTC. Shows all the triggers that were issued with my current settings, which were medium frequent trades, accuracy above 68%, which refers to the volatility API side of it, and with the volatility above 1.2 and less than 10%, and I was opening positions at 1% take profit. But we can now, with the new log system, we can actually simulate at any take profit that we want. So simulating at 1.4%, there was 31 wins and 5 losses, which was a percentage of 86% win rate for any position that was opened, and that's basically described here. I will zoom in. Let's just have a look here. This is easier. Okay, so on December the 29th, 10:05, an SBI trigger, open position, 0.0025, which is my buy setting here for Bitcoin. It's the amount of Bitcoin to buy, 1% take profit, but it was a win at 1.4% actually. So it opened at 46,707. The target we needed was 48,152 for 1.4%, and the highest it reached was 48,566 in some future time. So that would have been a win at that. So what does it basically mean? Well, the SBI tries to buy on the bottom of a market. So I tend to use it myself when there's been an all-time high. So if there's been an all-time high, let's just have a sort of look here now. So when there's been an all-time high like this here, pretty much you can guarantee that the only way it's going to go from there is not always going to go, but that it's likely it's going to drop from the all-time high. It's not going to just keep going up and up and up and up and up. And if it was, then we'd all be great. But it's not. So let's say it's going to. We consider that it's statistically likely that the market's going to drop and go back up. Even if it goes back up again, that it's going to fall from an all-time high. The obvious trick would be to try and buy in when it next drops from the all-time high, presuming you think it's going to go up. So one of the things that I do when that happens is I actually just disable the buying on the forecast, and I just leave the smart buy enabled which basically will not buy unless there's been a smart buy trigger activated. So looking at it from the 10th of, looking at it from December the 7th, I think it was on the logs there. I go back to the 7th of December at 9:11. There hasn't been one smart buy trigger up to the 26th of December that wasn't correct. It opened at 47,800, closed at 50, you know, with a high of 51,970 there. So every single one of those SBIs would have resulted in a take profit at 1.4%. If I'd have put 1.4% in there, it would have been okay to do so. So I can sort of simulate that and backtest it and say, well, what happens if I'd have gone for 1.8%? Well, now I'm down to 29 wins with 7 losses. But obviously, a win here. So if I'd, you know, I'd have won at 1.8%, so that's good. But that's not really what this is about. What this is about is, well, one, using the log system, as you can see, to do a very quick back test on something and see what would have happened if you'd have put that take profit in. But also that it might be possible to just disable the buy-in, which is triggered by the up-down direction in these API endpoints, and just go on the smart buy. So the smart buy, let's have a look. 7th of December, 9:11 PM. So if we go to 7th of December, let's go into a 1 hour. Let's just whiz it back. Sorry, won't be a second. Need to get back. Crikey. Should have prepared a bit more, shouldn't I? But let's not to be. So here we go. We're getting into the 7th of December. So there was this big dropout on the 4th, and then it was kind of sideways. And at 9 PM, the system issued an SBI to say, I think this could be the end of a downward cycle for us. So, and then it has risen from there, as we can see there. Let's just have a look at what it got to. It got up to 51 from sort of 49, mid 49s to mid to high 51s to 2000 scaled up. So by buying these, if you can detect these bottom outs here and here and here, then you can take advantage of the SBI triggers. If they were accurate, they would be the most likely to provide you with a good entry point. So anyway, okay, so I'm going to leave it at that. That's a very simple, it's just an idea. It's not really a suggestion or advice, but it's a way to use the Quantabotics SBI system alone. So it's just this is not enabled. Let's just turn the logs off. The intelligent protect is off. The switches on mine are actually still on, but let's just go for on the trade settings. I'm just going for no action on up and down, and I am quite simply just enabling smart buy to only buy on a downward drop. So about here, it's going to want to try and buy, and it's going to buy on these whipsaw sort of events. So I hope that's of some use to you.